Welcome to XM.com for today's daily market comment by Ref Boedian. I'm Cristina Marujos. Renewed fears about extended lockdowns in Europe are undermining risk assets again as a summer reopening of the continent's economy is looking increasingly unlikely. Germany became the latest country today to delay a planned easing of virus restrictions. European nations are not only facing a major resurgence in COVID infections, but the EU has yet to get a grip on its chaotic vaccine rollout. Supply issues have prompted the European Commission to threaten to ban exports of the AstraZeneca vaccine. The growing risk of a serious disruption to the vaccine supply chain weighed on the euro and pound while boosting the US dollar. The yen also powered ahead, rising across the board. The darkening outlook over Europe pulled global equity markets lower. Travel stocks were the hardest hit, while bank stocks, still reeling from yesterday's Turkish lira crisis, came under pressure from the falling yields of major government bonds. In China, the country's main stock indices slid close to 1% after the US, EU, Britain, and Canada slapped sanctions on the country for human rights abuses in Xinjiang. Losses in Europe were more moderate, however, as U.S. stock futures held steady in negative territory. Investors have already begun to speculate the size of the next stimulus package in Capitol Hill, with some reports putting a price tag of $3 trillion. And this could be what's shoring up the tech sector lately, as the Nasdaq Composite posted its second straight day of strong gains on Monday. Another comfort for investors yesterday was fresh reassurance from Fed Chair Jerome Powell. In prepared remarks for today's hearing before the House Financial Services Committee on the CARES Act, Powell said the Fed will continue to support the economy for as long as it takes. Treasury yields have pulled back somewhat in recent days, but Australian and New Zealand government bond yields have dropped even faster. Oil and other commodity prices have come under pressure from the fresh round of lockdowns that are threatening the recovery timeline. WTI futures plunged by more than 3%. The biggest loser, however, was the New Zealand dollar, which tumbled to a 3-month low after the New Zealand government announced several measures aimed at cooling the country's red-hot property market. This was today's Daily Market Comment. Thanks for watching at XM.com.